Hello, welcome to the National Real Estate Post. Frank Ray here with our good friend Barry Habib. Before we get started, just remind you guys, Carl White and the Marketing Animals, they're doing their one-day mastermind events. San Diego, Atlanta, Boston, and Chicago. So if you're in any of those areas, he's got these great one-day mastermind events coming up. They're fantastic. You cannot go to a Carl White event and walk out of there with nothing to do. I mean, you just walk out, it's like, I got like 6 things I can do today. Super great. He's so good at giving you great stuff to generate some new business right away. So don't miss it. If you're in those areas, there's a banner right here on your screen over on your right. You can register by clicking it, or just look straight down below the banners there. Click that and get registered. Or if you're on social media somewhere, there's a link around here somewhere to get registered. So with that, we'll move on to the big show. So, Barry, you're out there, playing gigs with your band at the Super Bowl, as usual, and hobnobbing with the movie stars and the athletes. It's so good to be able to just tie you down for a couple of minutes here and get you on the show. With the little people. Hey, they didn't ask for my autograph, did they? Did they say, hey, could you have Frank give me a call?
They will make a request. Your guitar playing really has got the reputation, so
okay.
We're getting requests.
I imagine.
When you get Frank Ray to
step in. Yeah.
We're going to step in. So we're working on that. We're trying to sign it.
All right. Well, you're going to have to go through my management. Jackie! You'll have to go through Jackie. Anyway, hey, last time we were on, I think the 10-year was about 170.
I was in Sacramento in Big Sac.
Yeah, that's right. And you were saying, hey, 10 years about 170. And you're saying, hey, if we bust below 167, it'll probably drop to about 151. And that's what happened. And so now it's bouncing up. So fill us in on what's going on, what your thoughts are going forward here.
So a lot of this was helped by the coronavirus, but those fears have subsided a bit. However, it's not over, in my opinion, the selling in the stock market. I think that the downside ended a little bit prematurely. So to me, there's another leg down in the stock market. I'm not saying it doesn't recover, but we did get what we thought. We hit 167. We thought if we broke underneath 167, the next stop would be 150. It was 1.509. It went to 1.505. So, pretty darn close, within 3 decimal places. We really kind of got that one right. And we hit exactly on that target. And a couple of things started to happen at the same time. Treasuries lingered there, mortgage bonds kind of lingered there, and then what you did see was you saw the stock market now has regained its footing, but it's a lot of volatile moves in the stock market. When you see these moves like in Tesla up and down, or in Amazon, I'm dating myself here, but it reminds me a little bit about the market in like 1999, and it was hot until it wasn't. So I don't think that just this coronavirus is being totally dismissed just yet, its effects on the economy just yet. And I think that the stock market's still a little pricey, so it wouldn't surprise me to see it pull back a little bit. There's some important levels to watch. Now, when the stock market pulls back, that will be beneficial to bonds. But notice how bonds have hung in there pretty good, considering that the stock market's had such the rally. Here's what I'm looking at. We are at 165 on the 10-year. Look for 167. Now, on the way down, it was a floor. On the way up, it's a ceiling. So watch that level. That between there and 174, those are 2 levels to watch. I don't think that we'll break above that. I really don't. I think that we'll probably be contained there. And then if the stock market does indeed have another leg lower, we could test 150 again. The big key is what is going to happen with the Fed injecting this liquidity between $60 and $100 billion a month. Now, initially it was supposed to stop in March. The last Fed meeting, the Fed said, we're going to extend it to April. Now, did they keep extending it? Just maybe. However, there are some Fed members that are already saying, hey, the stock market's frothy. They know it's because of this liquidity. We've talked about it. A couple of shows ago, I showed you the correlation between the Fed's injection of liquidity and the stock market. The S&P is correlated to it just so beautifully. So when the Fed pulls the plug on this, my feeling is the stock market does retrace lower, and that will definitely help the bond market.
Okay.
And the stock market can't recover and make highs a little bit later, but I think it's kind of gone a little bit too far, too fast. This is just a little consolidation that I think is needed, and the bond market does have an opportunity, in my opinion, to be good. Hey, listen, let's remember what's happened here is that you've seen all this stuff that the Fed's done, all this stuff in the economy, and the 10-year Treasury is still at 165. So the bond market, which is usually where the smart money is saying things aren't as great. Now, let's remember another thing. You just saw last week, you saw an inversion in the yield curve again. Remember the Fed, they've been injecting $100 billion a month. They had 3 Fed cuts, all to try and steepen the yield curve, but still we went inverted on Friday by 3 basis points between the 3-month Treasury and the 10-year. And the spread's really narrowed between the 2 and the 10. So I think that there is something there that the bond market is not convinced of, that we're out of the woods as far as potential recession coming up. Remember that if it happens, I did say 2020 recession. I know I've been saying that since 2017. I could be wrong, of course, but just perhaps towards the end of the year, we might see something happen there where things start to dip towards recessionary levels. If it doesn't happen in 2020, I believe it will happen in 2021, and you're going to have a big opportunity with very low rates, 0.5 to 0.75% below right now.
Wow. So what do we got coming up this week to look out for? Anything?
Well, the big things coming up with the jobs report tomorrow.
Okay.
So that's going to have a very meaningful impact on things. So we did get a very good ADP number, but the ADP number, a lot of the gains were in construction and leisure. Now that's attributable to really good weather that we've had in January. So the construction area picked up pretty well. The leisure and hospitality picked up well. So will we see some of that in tomorrow's numbers for the BLS report? It's quite possible, but I'd look at a couple of things. Number one, I'd be looking at the rate of unemployment at 3.5%, because that's going to be your canary in the coal mine if you start to see that go up, that things are turning. The other thing that I'd be looking at is with respect to the weekly earnings. I know most people look at hourly earnings, but you can make more per hour and work less hours, and so you're spending less. What really counts is how much you are getting paid, and that's weekly earnings. Now, those numbers in both the last report from the BLS and the Employment Cost Index, that used to be Alan Greenspan's favorite report about the economy, they showed some big drops in the earnings that people are making. So let's see if that continues, or maybe I'm suspicious that people just hired a lot of people for seasonal at lower levels of earnings for the holidays. And so I think that there could be a bump up there. And if there is a big bump up, the bond market typically doesn't like that. So we could get a little turbulence. You could see a little bit move higher Friday in interest rates. But I think it'll be temporary until the stock market comes down and money flows back.
Okay. All right. Good stuff, man. Great stuff. Wow. So a lot to look at. And it sounds like just overall, just a lot of potential volatility here.
There's going to be a lot of volatility, which means a lot of opportunity. So if you watch the market carefully, you will have some really great opportunities. And here's the thing you want to do. If you're on the real estate side, be an advisor and explain to people there will be lower rate opportunities. So frankly, what we have to do is, if you're a realtor, tell that customer to reach a little bit higher than they might have. I'm not saying do something that they're totally
crazy. Yeah.
But people tend to be a little bit conservative. I would say push the envelope a little bit. Do you know why? Because you'll have a refinance opportunity in 3 months, 6 months, a year and a half, and you'll get a lot of payment relief. So if you see this type of decline, for many people, they'll see $300, $400, $500 a month drop in payment, depending on the size of the mortgage, of course. And what that will result in is that will result in their ability to buy a nicer house now that they really, really love, and then get the payment that they want without having to sacrifice and kind of settling for a home that they, felt more comfortable with paying with.
Awesome stuff. And guys, Barry has been, he's told us time and time again, we have to be that confidant and that advisor to our customers, especially with all the I this and E that, lenders and real estate companies that are out there. More and more, we just have to be that person that people can rely on and who have the information that they need to make wise decisions going forward. And, based on what Barry's saying, with all the, potential volatility that's coming our way here, the best way you can do this, guys, is just really stay in touch with Barry. The best way you can do that, just go ahead and jump into MBS Highway. I'll put a link down there below. You can get it for 2 weeks for free. This is not a show to pitch MBS Highway in any way, but I'm just letting you know that it's there. It's available. You should take a look at it. There's a lot of resources in it for you as a loan officer that you can help your real estate partners with as well. And it's just going to keep you in tune with what exactly is going on so you can help your clients better. So you can be a better advisor for the clients. And so, hey, I appreciate you. I know you're in Florida. I know you got stuff to do. I caught you just as you're jumping into the hotel room. You're a busy guy. You're traveling everywhere. So we always appreciate it when you take the time to spend a little,
you and I are spending
do a little show.
Time in hotel rooms together. All right.
Yes, we have.
We're found out.
A lot of times, yeah. Okay, so with that, it's always a pleasure. Really appreciate you, brother. You guys watch what's going on. Stay in tune. Stay in touch with Barry. and connect with him through MBS Highway. You get out of here.
Who does that, by the way?
I don't
Who
even know.
does that?
I don't even know. Anyway, you have a fabulous day, you guys. Barry, thank you so much. Leave your comments down below. Forward, share, and subscribe. Click the Facebook button down there. Start a conversation with some people, especially with your potential buyers, because they're going to say, hey, what does this all mean? You start a conversation. You might be able to get a deal out of it. So with that, you guys have a great one. Barry, thank you. We'll catch you all later here at the National Real Estate Post. See ya.